I need to talk about something today that most channels won't touch, not because the information isn't important, but because it's uncomfortable, because it involves grief and loss and a phone call that nobody ever wants to make. But I'm going to talk about it anyway. Because the people who need this information the most are the ones who are least prepared for it. And being unprepared, on top of everything else that day brings, makes one of the hardest moments of a person's life even harder. Today, I want to talk about what happens to your Centrelink pension the day your partner dies. Not eventually, not down the track, the day it happens, and the days that follow. Because here is what most couples don't know. When one partner passes away, the surviving partner's pension doesn't just continue as normal, it changes, sometimes significantly, and in many cases, it changes within days, before the funeral, before the estate is sorted, before you've even had a chance to breathe. And the reason I want you to know this now, while you're watching this video on a quiet afternoon, while things are okay, is so that if that day ever comes, you or someone you love is not blindsided by a financial shock on top of an emotional one. Stay with me. I promise I'm going to give you everything you need. My name is Your Name, and this is the channel where I take the complicated, confusing world of Centrelink and retirement rules and translate it into plain language. If you're new here, welcome. Subscribe before you leave, because this channel covers things you genuinely will not hear anywhere else. And if you know someone who has recently lost a partner, a friend, a neighbor, a family member, please think about sharing this video with them. The timing might matter more than you know. Let me start with a story. Her name is Margaret. She's 72. She and her husband Ron lived in a small town in regional Queensland. They'd been married for 49 years. Ron passed away in August. A heart attack. Very sudden, no warning. Margaret had no time to prepare, no time to plan. She was just, one day, alone. Within 2 weeks of Ron's death, Margaret received a letter from Centrelink. It told her that her pension payment was changing. The amount she and Ron had been receiving as a couple was being reassessed. She was now assessed as a single person, and her new payment rate would be lower than the combined amount they had been receiving together, even though all of Ron's expenses now fell entirely on her. She rang her daughter crying, not because she was destitute, but because she had no idea this was coming. Nobody had ever told her. And in the middle of the worst weeks of her life, she now had to figure out money. That is what this video is here to prevent. Let me explain exactly what happens, step by step, so there are no surprises. When you and your partner are both receiving the age pension as a couple, Centrelink pays you at what they call the couple's rate. As of 2026, that is around $770 per fortnight for each person in the couple, so roughly $1,544 combined coming into the household. The moment your partner passes away, you are reassessed as a single person, and the single rate of the age pension is higher than the individual couple's rate. It sits at around $1,144 per fortnight. Now, on paper, some people hear that and think, oh, so the payment actually goes up. And in terms of the raw fortnightly amount for one person, yes, it does go up compared to what each individual was receiving as part of a couple. But here is the reality that the numbers don't show. You have gone from a two-income household to a one-income household. Ron's pension, his $772 a fortnight, is gone, completely. The bills haven't halved, the rent or rates haven't halved. The electricity, the groceries, the car insurance, none of it has halved, and you are now managing all of it alone. So, while the single rate is technically more generous per person, most surviving partners feel the financial hit immediately and sharply, especially if they were relying on both pensions to cover the household costs comfortably, and that adjustment happens fast. Centrelink will typically reassess your payment within days of being notified of your partner's death. Which brings me to the most important practical point in this entire video. You must notify Centrelink as soon as possible after your partner passes. I know that sounds cold. I know the last thing anyone wants to do in those first terrible days is make a phone call to a government agency. But here is why it matters. If Centrelink is not notified and they continue paying the couple's rate into your account, they will eventually identify the overpayment and they will ask for it back. Every dollar that came in at the couple's rate after your partner's death date will be treated as an overpayment. That debt will sit there, and recovering it, on top of grief, on top of financial adjustment, on top of everything else, is an enormous additional burden that can be avoided simply by making that call. The number to call is 132 300. You can also notify Centrelink through MyGov online. And if you genuinely cannot face it yourself in those first days, you can ask a family member or a trusted friend to call on your behalf. Centrelink does allow this, and they deal with these calls every single day. The staff are, in my experience, generally kind about it. Now, let me tell you what else changes, because the pension rate is only one piece of it. The assets test changes too. When you were assessed as a couple, Centrelink applied the couple's assets test threshold, which allows for a higher combined asset value before your pension starts reducing. As a single person, the threshold is lower. So, depending on what assets you hold, savings, investments, property, your reassessment as a single person might push you over the single threshold in a way you weren't over the couple's threshold. In plain English, you might have the same amount of money sitting in the bank as you did yesterday. But because you're now assessed as a single person, Centrelink may calculate that you have too many assets to receive the same level of pension. This catches a lot of people off guard. They haven't spent a dollar. Nothing has changed in their bank account. But the rules around them have changed, and suddenly their pension is lower than they expected. The same principle applies to the income test. If your late partner had income of their own, a private pension, superannuation payments, investment income, and that income has now stopped, your reassessment might actually work in your favor. Your combined income as a couple is gone, replaced only by your own, which may be lower. That can sometimes increase your eligible pension rate. But if your partner had life insurance, or you're receiving an inheritance from the estate, those amounts will factor into the reassessment as well. Centrelink will want to know what assets have come to you as a result of the passing. This is exactly why I encourage everyone, not just those who have recently lost someone, but everyone, to have at least one conversation with a financial advisor who understands pension rules before any of this becomes urgent. Because understanding how your assets and income would look through Centrelink's eyes as a single person gives you a plan. And a plan, even a rough one, is worth an enormous amount when everything else is falling apart. Now I want to talk about something else, something that isn't talked about enough: the bereavement payment. Most people don't know this exists, but Centrelink does provide what's called a bereavement payment to surviving pensioner partners. It's not enormous, but it's real and you are entitled to it. Here is how it works. When your partner dies, Centrelink will continue paying the combined couple's rate, as if both of you were still receiving it, for a period of 14 weeks after the death. This is the bereavement period. What that means in practice is that instead of your payment immediately dropping to the single rate, Centrelink makes up the difference between the couple's payment and the single payment and pays that gap as a lump sum. It's their way of acknowledging that sudden financial adjustment is difficult and giving you a small buffer to get your footing. After those 14 weeks, your ongoing payment settles at the standard single rate, subject to your updated assets and income assessment. Now, this bereavement payment is not automatic in the sense that it just appears without anyone knowing. You need to have notified Centrelink of the death. Once you do, and once they process the update, the bereavement entitlement flows through. But if you delay the notification, you may lose some or all of that 14-week buffer. Another reason to make the call as early as you can manage. Let me also mention superannuation, because this is another area where surviving partners are often surprised. If your partner had superannuation, and you are named as the beneficiary, which most married couples are, you will typically receive either a lump sum or a reversionary pension, depending on how the super fund is structured. A lump sum from super paid to a spouse is generally tax free, but it does become an asset in Centerlink's eyes once it lands in your account or is invested. So, if a significant amount of super flows to you, it may affect your pension assessment. A reversionary pension, where your partner's super fund simply continues paying you the income stream they were receiving, is treated differently again. Centerlink has specific rules around how reversionary pensions are assessed, and there is usually a 12-month assessment delay before the new income counts fully against your pension. These distinctions matter, and getting the timing and structure right can make a meaningful difference to your pension entitlements in that first difficult year. If your partner had a self managed super fund, the situation can be more complex again, and I'd strongly encourage involving a financial advisor as soon as the estate process allows. Now, let me talk about what you should actually do, not in some vague general sense, but concretely, step by step. Step 1. In the days immediately following your partner's passing, contact Centerlink on 132 300 to report the death. If you cannot do this yourself, ask a family member to do it for you. Give them permission to speak on your behalf. Step 2. Ask Centerlink specifically about your bereavement entitlement. Ask them how long the bereavement period is, what payment you'll receive during that time, and exactly when your regular single rate assessment will begin. Write it down or ask them to confirm it in writing. Step 3. Request a full reassessment appointment. Tell them you want to understand how your assets and income will be assessed as a single person going forward. You have every right to this information and to ask for it clearly. Step 4. If your partner had superannuation, contact the super fund as soon as possible. Ask about your beneficiary entitlements, the payment options available to you, and the timing of any payments, and ask them specifically how those payments will interact with your Centerlink assessment. Step 5. If the numbers don't add up, if your new payment rate seems wrong or lower than you expected based on what Centerlink told you, ask for an explanation and, if necessary, ask for a formal review. You have the right to request a review of any Centerlink decision. It doesn't cost you anything, and it does not affect your payment while the review is happening. Step 6. At some point in those first few months, when you have the capacity, sit down with a financial advisor. Not to make big decisions, just to understand where you stand, what your income is, what your assets are, what the next year looks like financially, because having that picture clearly in front of you is one of the most stabilizing things you can do during a deeply unstable time. I want to take a moment now and speak directly to those of you who are watching this, not because you've just lost someone, but because you're planning, because you want to be ready, because you love your partner and you want to make sure that if the worst happens, you or they aren't left scrambling. That thinking is one of the most loving things you can do for each other. Have the conversation. Know what each other's Centerlink payments look like separately. Know where the super funds are, who the beneficiaries are, what the account numbers are. Know where the important documents are kept. Know which financial advisor to call. None of that conversation makes loss more likely. It just makes survival more possible. And if you are watching this because you have already lost your partner recently, or even not so recently, and you are still finding your feet, I want to say this to you clearly. You are not behind. You are not failing. Grief takes the time it takes. The practical things can wait a little. The important thing right now is that you know help exists. Centerlink has social workers. They are free. They are available to pensioners exactly in these situations. You can ask for one by calling the main Centerlink line. You don't have to navigate this alone. Margaret, the woman I told you about at the start of this video, she's doing better now. She settled into her new payment. She got the bereavement amount, which helped her through those first few months. Her daughter sat with her and went through all the paperwork. It took a few weeks to feel like she had a handle on things, but she got there. And the thing she said to me, the thing that has stuck with me, was this. She said, I just wish someone had told us all of this years ago when Ron was still here, because then it wouldn't have felt like such a shock. That's why I make these videos. If this one helped you, if it answered something you've been wondering about, or gave you information you know someone else needs, please share it before you go. Put it in a Facebook group, send it to a friend, share it in a family chat. It costs you nothing, and it might mean everything to someone who is about to face exactly this. Hit the like button if you found this useful. Subscribe if you want to keep getting information like this delivered in plain language, without the jargon, without the scare tactics, just straight talk. And in the next video, I'm going to cover something a lot of you have been asking about. What actually triggers a Centerlink review, what happens during one, and what your rights are every step of the way. You don't want to miss that one. I'll see you then.